Good afternoon. Time to have a look at what's happening. From a markets perspective, we saw Asian markets mix this morning. This is as investors weigh some of the measures that Chinese authorities have pledged in order to support the Chinese economy. We did get GDP numbers coming out a little bit higher than expected, but it was the retail figure that has investors concerned that came below expectations. On the other hand, markets are grappling with the idea of faster Fed tightening. Nonetheless, we did see equity markets in Japan a little bit higher, and this is on the back of a weaker yen. Hong Kong stocks, in particular the tech stocks, were the ones that were hardest hit. This follows an announcement on Friday in which Chinese authorities have banned the live streaming of unauthorized video games, so that affecting the likes of Alibaba as well as Tencent. We did see them also weaker. But then the other topic of concern for investors are the comments coming out of St. Louis Fed President James Bullard saying that the central bank will need to move a lot quicker in order to deal with inflation. He's seeing 3.5% in terms of interest rates. That would mean a half-point hike at each meeting, even saying that a 75 basis point hike is not off the table, even though that is not his base assumption. But to talk to us about all of these dynamics, we are joined by Makwe Masilela from Makwe Fund Managers. Makwe, thank you so much for your time. Given what's happening, globally, all these news coming in, and of course, South Africa, the JSE coming back into trade on a Tuesday following the Easter holidays, how did we open locally?
Good day to you and to the viewers. Yes, we managed to do well. We opened in the green, and I think it's a benefit of a weaker rand, just like what we see with the Japanese market benefiting from that weaker yen. And yes, the treasury yields are still high, hence we see the US dollar continue to strengthen. But yes, remember, our market is mainly driven by rand hedges, hence the likes of the goldies, the likes of the impalas are doing well, benefiting from that weaker rand. But financials also giving or lending a hand, and it's very surprising, Nastasia, because it's happening on a day when the rand has weakened. Usually when a day like this, you get the financials to struggle. But those hawkish comments as well coming from the voting Fed official, saying that we must not rule out a 75% interest hike is not helping to alleviate our fears. And also, we still have our attention when it comes to the latest developments when it comes to Russia and Ukraine war.
On the back of that, we have the World Bank cutting its forecast for global growth. And I'm wondering, what's your outlook so far when you look at, April, especially taking it from a global markets perspective? What does that look like? Also, given the fact that there's a lot of uncertainty between where we are now and the end of the month.
It's not surprising, and we expect the likes of IMF later today to join them, to also tell us that the global economic growth is not looking okay. And further to that, since we don't know when this war will end or how far will it escalate, we won't even be surprised that in the coming month or two, the guys tell us that the global economic growth is even going to be worse than what. And also not just the minerals, but also the agricultural commodities. So if one has a play around that, then it's something else. Maybe your concern might be that who's the biggest buyer of those commodities, which happens to be China. Will China now start growing? Yes, we've seen the first quarter GDP number, but the most important number is going forward, because that's when we'll see a clear reflection when it comes to the COVID-19 lockdowns. So that's going to be a big issue. So I think markets will continue to be very volatile, and unfortunately, volatility has been name of the game for the past few months or so.
One of the other aspects, as you mentioned there, with regards to the Chinese first quarter GDP numbers that I have alluded to in my intro, coming in higher than expected, retail figures coming a little bit lower. And I'm wondering whether, given all these economic data points coming through from China, are you getting a clear read on what's actually happening on the ground there, given the COVID situation and the lockdown measures?
I think we do to some extent, especially if you look at the retail sales numbers, because those numbers are for March and the GDP is for the first quarter. Yes, it did manage to beat expectations, and we can argue that maybe our expectations were too low, hence the guys managed to beat expectations. But going forward is going to be the issue about their zero tolerance when it comes to COVID-19 and also the war as well. And now, we've seen on Friday, we were a little disappointed because the guys, when it comes to the Bank of China, they didn't do as much as we thought. So probably the markets will try maybe to swing their hand, and the guys probably in the coming few days will try to do more to lift the economy. Yes, we're expecting an announcement later today as well to tell us what is it, the interventions that they'll be doing to help those businesses and individuals who've been impacted by COVID-19. Hopefully, they'll come with more concrete stimulus and the markets might get a boost from that. And more importantly, the mainland economy has to pick up for these companies to start making money.
Let's talk about something a little bit more exciting now, and that is Twitter and Elon Musk. What are some of the questions you're asking yourself, especially as it relates to Elon Musk's bid for Twitter and where it could go from here?
It's getting more interesting because there's a company called Apollo, global management. I mean, it's the world's biggest buyout firm. The guys are prepared to back them up should a need arise. And we've seen Elon Musk himself, he's trying more or less what you can call a plan B, that listen, it's not for the board to decide, because anyway, you as a board, with the founder resigning end of this year, you basically don't hold shares. So it should be an offer that is made directly to shareholders so that they can decide exactly what they want to do. But we don't see this ending anytime soon. Yes, Twitter itself as well, they're trying to block this hostile takeover by coming with what they call a poison pill. Basically, Nastasia, they will allow shareholders to be able to buy shares at a discount if somebody continues to increase their shares without getting the board's approval. So it's getting more interesting going forward.
All right, Mark, we're alluding there to what is commonly known as the poison pill. And perhaps even later this week, we'll explain it in depth in terms of what it means for Twitter and whether another bid could override Twitter's poison pill. What does an uncensored Twitter mean for markets? What is it worth? And also, most importantly, what is Twitter worth now? So these are some of the questions we are hoping to answer as the days go by. And of course, as we pay attention to that particular Elon Musk debacle and how that relates to Twitter. Nonetheless, that is it from me. We'll have more news with Nompumelelo Siziba at the top of the hour. Goodbye.